Hello, my name is Tomy Shaw, and on today's channel, Millionaires Knowledge or Day-to-Day Finances, what we were trying to determine is how much money do you really save when you're buying a home that is worth less than you can afford. So let's just look at the banks are giving you $500 loan. They're giving you a $500,000 loan. We'll see how much is that $500,000 loan really costing you? How much is it bringing out your cash flow? So in this example, let's just look at the mortgage is around $500,000. Your credit rate is not that good, so they're giving you a 5%. We're putting it on 25 years, and we could see the payment frequency is monthly and the term is 5 years. It's every time you're gonna renegotiate with the bank to adjust your interest rates. So in this example, the interest payments after 25 years is gonna cost you $372,000 after 25 years of interest. So let's just say that you are wise and you say, well, okay, I'm able to afford a $500,000 home. But what if I buy a $300,000 home? How much is that going to cost me in the long run? Well, what are we going to see is that the difference between this amount and the last amount, it's going to be 220,000, $223,000. So you just saved $100 and something thousand dollars by buying a home that was worth $200,000 less. That's 50% of the amount that you paid for is going into interest. So this is why it's really important to understand that the value of the house that you're buying, it's a lot better to buy it cheaper because you're going to be saving a lot of interest over the long run. Even the expenses between the two houses is going to be drastically lower on the home that you're buying it for $300,000. So, and on the other hand, when you're looking at this, it's a lot easier to pay off your house faster when you have a $300,000 loan instead of a $500,000 loan. And let's just say, for example, that because this makes your credit better because they see you as somebody more solvent, and it brings down interest rates to, let's say, 3%. Now this is going to bring down the interest rate again. So like we went from 340 something thousand dollars to $223,000 to $125,000. So every time we see this interest going lower or the mortgage going lower, this is making you save money. So over the long run, if your goal is to be financially free, the less cost that you have, the easier it will be for you to be financially free. And that's what me and my wife did. We were approved for a $350,000 home, and we bought a $150,000 home, and we were renting out those rooms. And 2 years and a half, that house was paid off because we bought something way below what we could afford, and this made it possible for us to accelerate the process of paying off that home a lot faster. So the same can be said when you're paying monthly. Every time you're paying, like let's say you pay this home in 3 years or 5 years, well, you know you just saved another $80,000. In today's money, that is worth $80,000. But I know that inflation eats away the interest rate, but this is a safe investment. What, like, it's really important to understand that a safe investment is something that is guaranteed. You are guaranteed those returns in the future. So every time I made money in my life, it was because I was looking for secure investments. I went into real estate, I was paying off the mortgage faster, I was doing secure things. I was buying second-hand cars. The chances of a second-hand car to lose its value is a lot lower than a brand new car. As soon as you go out of the parking lot, it loses 20 to 25% of its value. So every time you do something smart, what you're gonna do in your life is that it's gonna give you the potential to achieve your goals quicker. And if your goal is to achieve financial freedom or to retire young, this is a good way to do. So on today's Millionaire's Knowledge, that is what I wanted to show. I wanted to show you that when you buy or live or below your means and you pay off your home faster, this can equate to a lot of money that you save over the long run, and I recommend this strategy to building your wealth. This is secure. This is something that you can always have. That equity is always there, and if the market goes down, you're still secure because you have 50% paid off of your home. You don't have to sell quickly. You don't have to look at solutions for the short term, and you can make better decisions. So if you like this information on day-to-day finances, on millionaires knowledge, feel free to share this information, subscribe and hit that notification bell. It really helps me out, really helps me to grow the channel and give people information that is able to help them. And that is my goal. I want to share that knowledge to give people an advantage, and that's where I want to go. So thank you. Have a nice day.